Hello again. Today we're going to talk about a company that filed recently for an IPO at the SEC called iHuman. Now, this is not to be confused with iHuman Patient, which is part of the Kaplan education suite. This is iHuman, an educational software program predominantly operating in China. I know some people might not feel so great about investing in Chinese companies, so if that applies to you, you might not want to listen to this video. But if you're interested in investing in a relatively small company with future growth potential, then you might be interested in this. iHuman is the #1 online childhood edutainment provider in China. Edutainment, that's an interesting phrase, isn't it? But that's what they're intending to do, to make education fun. So you can see here some of the things that they have as their suite of offerings for education. They primarily operate through the App Store, either in Google Play or the iTunes App Store. Listed here are some of their offerings, such as iHuman Magic Math, iHuman Chinese. There's a version for Chinese-speaking students to learn English, and then they have iHuman Books and iHuman Stories, where you can listen to them either in English or Chinese. Why might you be interested in investing in an edutainment company? Well, a report from Mordor Intelligence shows that the fastest growing market for edutainment is going to be in the Asia Pacific area, and the largest market is in North America, with the annual growth rate expected to be 17%. In their SEC filing, iHuman displays how their learning cycle takes place. The student starts with playing an interactive game that illustrates a character. Say the person's trying to learn a Chinese character. Then they can study that character, then they can get drilled and quizzed on it. Eventually they are writing, and then reviewing, and then reading. Sounds fantastic, actually, for a young child who might be learning Chinese. And this graphic just shows how some of their education takes place for a Chinese student who might be learning English. They have a fun little toy as well, a smart reading pen that you can see here. The child can take the pen and touch it over the pages of a book, and the pen then has a speaker in it which can aid in the child's learning, especially if they're trying to figure out how to pronounce something. Let's talk a little bit about the structure of this company, since investing in Chinese companies is a little bit more circuitous. The Chinese government limits foreign investment in certain sectors of their economy. Internet is certainly one, and education is another. You could see how this company falls under both of those umbrellas. In order to get around that foreign investment, Chinese companies have operated through something called a VIE, which stands for Variable Interest Entity. Variable Interest Entity. Essentially, it's a way for Chinese companies to sell stocks to foreign investors without the investors technically being invested in the actual Chinese company. Most of these companies tend to operate out of the Cayman Islands, and this one certainly does as well. While the concept certainly sounds risky when compared with United States companies, this concept is not new, and if you own stock in Alibaba or other Chinese companies, you're already operating through this variable investment entity. Nevertheless, it's important to know that should rules change in the People's Republic of China, your stock investment becomes a very gray area, and it certainly carries then some additional risk on top of the risk that every investor takes when investing in a company.